Dzień dobry, assalamu alaikum, ciao, konnichiwa, bonjour, hola, good morning, good morning, good morning. This is Ken at 10, broadcasting live from SW16, where it is an absolute corker of day. It's absolutely beautiful out there. How are you? I hope you're well. I'm a little bit nasal. I've got hay fever, terrible hay fever at the moment, but I hope you're well. As far as the market's concerned, still really busy. A few headlines I wanted to touch on. Will they stay or will they go? I can just hear you singing along now, those of you that are old enough to remember, same as me. But yeah, so a big day today. The Monetary Policy Committee meet today. I don't know why I've got number 10 behind me, because actually it's not there, but it just looks kind of official, doesn't it? So here we are live at number 10 talking about interest rates. Feels right, doesn't it? But actually we should be at the Bank of England because they're independent of the government and make their own decisions, allegedly. Do you believe that entirely? Yeah, I think there's a bit of influence coming from there. And we've already heard this week Boris Johnson come out and say, I can't help you in some ways in terms of mortgage payments. I can't help you in every way. And I think that's him anticipating what he already knows, and that is that interest rates are likely to go up. The meeting today will be decided. There is a vote. There's a chance they won't go up. If they do go up, it won't be massive. It will be 0.25%. It's widely held that they will go up. My gut feeling is they probably will. They might hold, and that would be very good news if they do, but they're more likely to go up on balance. So what does it mean? Well, I'll tell you something. The crisis is already making people hold back in buying decisions. As far as the market's concerned, it hasn't had a market effect because there are still far, far more buyers than sellers, but certainly a lot of first-time buyers. An article today saying that 7 in 10 buyers have delayed their purchasing decision due to higher costs through the fuel crisis and fuel poverty and increasing costs in every direction. So lots of people are kind of having seconds on whether to buy. And 9 out of 10 people say that they're affected and have been impacted by higher prices across the board. And as many of you will know, I've been saying for a while now, lenders are going to start factoring in these increasing costs when it comes to granting you a loan. And this is not financial advice, but for that reason, if you're thinking that it's a little bit tight for you now, but you can do it, things may get tighter in terms of lenders and how they view you and your capability to borrow based on your salary, based on the fact that everything's going up so much. Therefore, question, can you still afford the same amount in mortgage payments? Arguably not if everything else has gone up around you. So my feeling is that there may be a tightening in that direction. But generally, I think interest rates are going to go up. In terms of what people are doing, there's an article in the Telegraph today saying that more borrowers are locking into long-term fixes, and it's up 26% on a year ago. That's 26% more fixes locking into 10-year deals than a year ago, which is interesting. Long-term rates we know are predicted to be lower than short-term rates, and that's something I mentioned yesterday about swap rates. I don't want to go into the technical detail of that, but basically the markets anticipate that in the short-term interest rates are going up, but in the longer-term interest rates are possibly coming down, certainly not going any further up. So interesting to see that, and be interesting to see where that goes. 50% of transactions in the UK at the moment are being down valued. This is where you agree a purchase and you fight against everybody else to try and get it because there's likely to be competition. Therefore, you end up paying a premium, and that premium is not necessarily reflected in the last sale on the road that happened maybe 2 or 3 months ago. And this is a real problem because prices 3 months ago may not reflect today, but what lenders and surveyors want is comparable evidence showing that the price you're paying is a fair reflection of any other house that might come onto the market so that their security is safe. How much will they factor in the fact that, you know, you've sold at a different time, you've bought at a different time, and what the market's doing? It's very hard to say, and it's a matter for individual surveyors. And I can tell you now that there are surveyors in our area that when we hear the name, it sends a shudder through our spine because we know they're likely to down value. And some of them will be very kind and will accept, well, I say kind, logical, and accept comparable evidence. We have one in particular who, regardless of comparable evidence, will still stick to their guns, because effectively when they valued your house, they downvalued the house that you're buying. If you then challenge them and you show them comparable evidence and they agree with your comparable evidence, what they're actually saying is, I was wrong. And nobody wants to say that, do they? So that's why it can be difficult once a surveyor has said that for them to then backpedal. Are they always right? No, quite often they're wrong. Can you do anything about it? Well, you can change lenders, you can provide comparable evidence, you can request a second opinion, but you probably won't get one. You can appeal to the lender, they probably won't listen, it will fall on deaf ears. So the easiest way around it is to go to a different lender. The difficulty is some surveyors are panelled for multiple lenders, so you need to work out whether the same surveyors are panelled for the other lender that you're looking at. That's a good thing for a financial advisor to advise you on, not something we can help you with. And by the way, this is not financial advice, but I just thought you should know a lot of down valuation out there. It doesn't necessarily mean that you're paying too much for the house you're buying, because remember, something is worth what people are willing to pay for it. And if others are willing to pay the same or more than you, then probably you're paying about the right amount. But that doesn't mean there's comparable evidence that will support your buying decision. And therefore, you've got a decision to make. And the decision you should make if you're downvalued is not, go to the person that you're buying from and say, I want to reduce the price by this amount, because if they've got that much interest anyway, chances are they're just going to go to another buyer. The decision you have to make is whether you have sufficient savings to support that gap. And if you do, whether you're prepared to proceed. And whether you're prepared to proceed should really rely on one thing only. How does that decision now, that buying decision, how does it compare with other things that are on the market now? And if you know that it's still a great deal and there's nothing else that's comparable to it or better than it for the price, then I would stick with it if I were you. But if not, then obviously you're going to go and look at one that is better value if there's more things that are better value now. But in this market, that's unlikely. So think carefully before you just pull out just because your property's been downvalued. We have done a YouTube video on down valuations and surveys at length. Do look up Ken Hume on YouTube if you're not on that channel already, if you want more information on that. Interesting, I saw that UK mortgage debt has gone from 4.66 billion to 7 billion pounds. So it just goes to show we are taking up more mortgages now. There's more mortgage debt building up. I wonder how much of that is retirement mortgages now. Lots of people are taking out these retirement only mortgages where they literally mortgage up the house. They've maybe got no beneficiaries to pass their assets on to. So why not finance it up where you don't have to pay the interest back and then it's paid upon your passing? This is becoming more common. I wonder how much of that difference between 4.6 and 7 billion is people in that position. Certainly lots of new first-time buyers getting into the market as well. But yeah, mortgage debt going through the roof. That's interesting to note. And also Devon. Devon now, for a while, there's been a big controversy about affordable homes because prices have gone through the roof there. I mean, up 20% plus. It's crazy. And local people can't afford to get on the market there. And the local authority have just said, they've just announced that they now are doing affordable homes in Devon. Two things. Firstly, affordable homes are rarely affordable for the massive. Secondly, do you know how many they've got? 8. 8 affordable homes in Devon. Like that even puts a slight dent in the problem. It's unbelievable. But, that's the soundbite for the politicians. We're providing affordable homes. No, you're not. You got lucky with 8. That's not enough. It's too small. And this requires far more central government legislation to deal and tackle with this problem. But that's a subject for another day. So apart from that, busy on valuations today. What I love about my job is that we get involved with people's life stories. And we've got some wonderful one particular one today, which is absolutely fascinating to me. Obviously, I can't disclose personal information, but I always love to get into the personal stories. They can be so fascinating. People in such different circumstances. And, hopefully we're hoping them get to their next stage in life. Sometimes it's sad, sometimes it's happy. On this occasion, it's a very happy situation, but it's just lovely to play a very small part in people's lives in that way and to be trusted with their biggest asset. That's a massive thing, and we never take that lightly. We always take it very, very seriously. We're very proud to be trusted by so many people in doing what we do. So if you think of selling, still a really good time. We're still busy. Do give us a call. We're always available for you. Maybe not today because we've got a busy day today, but we'll certainly fit you in as soon as we can because the market's still strong out there right now. Will it last? I'm not so sure. Who knows? Nobody really knows. I think what will happen is we'll see far less volume, far fewer people selling in the second half of this year, and therefore the market will be underpinned by a lack of stock. And therefore, I don't see prices falling off a cliff, but I do think that we'll see a slowdown in the numbers of transactions. And the big impact for most people is they won't be able to find somewhere to go to, although they'll be able to sell their own. So if you think of selling, still a really good time, do give us a call. Or if you just want to chat, you're not sure, you're very welcome to give us a call and we can come around and have a chat with you whenever you're ready. So thanks very much for watching. Stay safe and well. Look after yourselves. And if you can, your friends and family. Ciao.